Hello and welcome to IG's Trading in the Markets. I'm Angeline Ong, and soon I'll be joined by Chris Versace, Tematica CIO, to talk about the Fed speakers and how that's been rocking the markets. Chris, thank you so much for joining us. I mean, we had Jay Powell coming out, no surprise really, saying that recent data had not given greater confidence in inflation. I mean, no surprise there, but really he's stating the obvious that this problem isn't going to go away, right?
I would agree with you on that. For those like us who follow the data, taking a look at everything from the inflation comments in the March PMI reports to the March CPI, March CPI, seeing the levels, seeing the direction of the most recent data, we had to conclude, even before Fed Chair Powell spoke, that the data was, quote, not the good data that he was looking for, moving in the wrong direction, call it whatever you want, Angeline. So it was really no surprise to those people who, again, pay attention to the data. But as we know, not everybody pays attention to the data the way that we do. Some people are indeed surprised. And I think it speaks to probably one of the biggest mistakes that investors can make. And what I mean by that is there are folks out there that look for support for what they want to have happen in the data and kind of shoehorn it into their thinking. It's a huge mistake. I think the smarter way to go is to, as I like to say, let the data talk to you and make sure you triangulate your data around multiple points.
How about oil? Many of the analysts, strategists, fund managers I've been speaking to recently have said the biggest curveball to current monetary policy could be oil because it's going to increasingly fan hot inflation data.
I think that's a fair point. We have seen oil move up, considerably over the last several weeks. I think there are a couple of factors here. One is the U.S. economy is performing better than expected. The recent round of data shows that. We've seen March quarter GDP expectations move higher, certainly compared to where they were in early April. There's some rumblings that China's economy might be finding its footing. And then, of course, what's happening in the Middle East, which is probably the biggest unknown about where oil is going to head in the near term and the medium term. But if we game it out, if we see oil prices continue to move higher, we know that there's a ripple effect, not just at the gas pump, but on surcharges and other transportation costs that will incrementally fan the flames of inflation. On the other hand, if the Middle East issue kind of de-escalates, we could see oil come back a little bit, still likely higher than where it was a few weeks ago. So I think the argument holds that it's going to continue to be a headwind on good data progress when it comes to inflation.
And which camp are you on? Some say that oil likely to head further towards the sort of 85 mark, 84 mark. Others saying that, there simply isn't enough demand around, so it's going to head perhaps lower towards 80 by the end of the year.
Possible, but if we take a look at the expectations for the global economy, Bank of America, their latest global fund manager survey shows a growing percentage of institutional investors are not expecting a hard landing or a soft landing. They see no landing, which tells you that the economy continues, to improve, arguably better than expected. We will have to continue to watch the data. But the other wild card to watch, if you want to think about that, if we're, see signs that maybe usage is slipping a little bit, we have to watch OPEC Plus, because remember, their current production cuts only extend through the end of the current quarter. They could turn around and extend them through the back half of the year. That would be another factor that potentially props up oil prices at higher levels.
Now, we've had earnings season rumble on, certainly not finished yet, but the early signs are so far so good for the US earnings season. Netflix, of course, one of the biggies that we're looking out for. Their shares have been on a tear, but can it wow investors this time around?
It's a great question. Expectations are high, not just for Netflix, but for, the overall market in general. The second quarter is expected to show a reacceleration in earnings growth for the S&P 500 after being, largely unchanged over the last, 3, 4, 5 quarters. So companies are going to have to deliver, and those that have their stock prices, as you say, zooming, they're going to have to deliver not only a pristine quarter, but the guidance will have to likely surprise to the upside as well. You can't justify, outsized moves with just inline guidance these days. But with Netflix, what does that mean? There's really three levers that you're going to want to watch. One is going to be subscriber growth. Obviously this is crucial given their business. Two, what progress are they really showing on the advertising front? And then third, just on the cost side, what's the expectation for content spending? And as we put all those three kind of levers together, we'll have a much better understanding about their guidance and potential upside to that guidance in the coming quarters.
And we've talked about this quite a few times. Our clients here at IG are very interested in the diabetes/obesity space and skinny pens and the like. Eli Lilly, we've just had news that its weight loss drug in the early trials show that they might help with sleep apnea severity, and this is in the recent late-stage studies. Are we likely to see a bounce effect in terms of its shares, much like the helpful side effects of a drug in the late 70s, I believe?
I think
I'm going to let you say the name.
I think you're referring to little blue pills.
Yes,
better known as
I'm going to let you say the name.
Yes, yeah. So it's certainly possible. I mean, look, there have been any number of drugs that folks are pursuing one pain point, if you will, only to find out that there are multiple uses. We'll have to see what happens in terms of the study, but in terms of sleep apnea, that kind of ties into a little bit of what I like to call diabesity, diabetes, obesity. It kind of stands to reason, but again, we'll have to see where the study lands out. But I also say too, Angeline, that this is becoming a increasingly crowded field as more look to tap into the obesity epidemic, if you will. So we'll have to see with any new product launch, what's the acceptance? Is it able to gain share? But the other question too is, are there any side effects that kind of should make us a little more careful or be warned about the adoption of certain drugs? I don't know about you, but here in the States, whenever there's a drug commercial on TV, I almost feel like that there's like a list of 10, 15 side effects that you have to watch out for. Then you almost ask yourself, am I better off not taking the drug to begin with?
Indeed, that's a good question, because the real powers of Viagra weren't really apparent until I think the early 90s. So we could find out a bit more, both the positives and the negatives. Do you still see growth in this space, though, given that everyone's been talking about these skinny drugs becoming pills now, going from syringes to pills?
So I have to get past your early powers comment, but yes, I do. Any type of delivery system that is easier, I think warrants incremental adoption. There are a lot of folks out there that are just skittish about needles, therefore injections. Pill form, it's a lot easier. It's far more mobile, if you will. You don't have to worry necessarily about storing conditions in a pill form. So I do think that would help. But again, I still think it has to be balanced out with what the long-term effects are, as well as are these drugs that people need to be on forever? That's the big question.
Thanks very much, Chris Versace, the Tematica CIO, talking Netflix drug stocks and potentially oil being a big curveball for monetary policy. I'm Angeline Ong, and this is IG's Trading the Markets.